Inflation data came in hot this week, surprising most economists and strategists to the upside as CPI and PPI advanced year over year by 5.4 and 7.3% respectively. So does this undermine the Fed's premise that high inflation will be transitory, and did our outlook change? Let's break it down. So it's important to look beneath the surface of the data to really understand what's going on. And when we do that, we see that the most intense inflationary pressures are really coming from a few key categories that are certainly important, but where it's really clear that the demand surge is driven by the reopening of the economy. And that's overwhelmed the supply that's been constrained by lack of available workers and other supply chain disruptions. These are categories like restaurants, hotels, airline fares, and other recreational services, and have had an outsized contribution to the increase in consumer inflation, and we anticipate that those price increases will not continue to rise at this elevated rate. Demand is going to normalize and supply will catch up. It's clear that producers have successfully passed through some of the increased input costs reflected in the PPI data down to consumers, but we similarly anticipate those pressures to abate as supply meets demand in the third quarter and beyond. We will be living, though, with elevated levels of inflation until then, most likely. For investors, though, the most important thing to remember is that the market is forward-looking, and the market is telling us to look beyond this year, not only in the current yield environment, which suggests that today's inflation is transitory, but longer-term inflation expectations have fallen as well. The bond market in particular is looking through this unusual period and likely recognizes that some of the significant inflationary headwinds are coming back into view. Aging population, the ever-accelerated use of productivity-enhancing technology, and now the extremely high debt levels across the developed world. Those all spell trouble for the inflation bulls. We anticipate lots of volatility around inflation data over the next several months. However, we affirm our view that inflation ultimately will remain muted.